Well, we are in conversation with the management of AkzoNobel on the sidelines of the company's Q4 results that have come out earlier this week. We are joined by Mr. Rajiv Rajgopal, who is the managing director at the company. Sir, thank you so much for taking the time out and speaking to us. Well, it was a challenging quarter, not just for your company, but for the industry as a whole. If you take a look at your numbers, revenues have been largely flat at about 700 crore rupees. Margins, however, came in as a surprise, higher at about 14.8% versus 10% in the same quarter last year. Can you take us through what has been the underlying volume growth as well as the change in the domestic decorative paint business in the quarter gone by?
Yes, hello Yash. Great to be back on your channel. On the performance of the last quarter, two parts. First, on the revenue front, yes, it's been a bit tepid. As far as AkzoNobel is concerned, it's a part of a concerted strategy of making sure we deliver 15 by 20, where we are really re-looking at all the business portfolios that we have and making sure that we exit absolutely low margin business or businesses which are not accretive to our 15 by 20 and hence India's target of 15 by 20. So really the target for us in the short medium term is to make sure that we get to a double-digit ROS, and we've been trying to rework our portfolio across our paints and coatings business, which has got reflected. From my point of view, quarter one is in line with our strategy of making sure that we drive both the brand power, the mix and pricing to try and make sure we deliver our goals for India for delivering a double-digit margin by 15 by 20. As far as the industry is concerned, you're right, the top line has been a bit tepid if one were to look at the previous quarters, but I wouldn't read too much in terms of structural changes in the industry. There are two or three things happening. One, post-GST, you all have covered. The fact that there is a lot of acceleration happening from the unorganized to the organized sector, and this is largely in the economy and categories like putty, etc., and the economy part of the portfolio, which has seen a bit of a climb, which is why you're seeing a bit of gross margin dilution as far as some of the other players in the industry is concerned. For us, the focus has been to try and get the core brands, particularly for us in our premium, back on track, and hence our focus has been to try and get back the better mix across our paints and coatings business.
That's right, sir. Just wanted to get a sense of how are you assessing demand on the ground level, because we've had Asian Paints as well as Kansai Nerolac, which has come out with their Q4 numbers, and the management commentary as far as the demand outlook is concerned has been quite uncertain because of the two or three reasons that you have highlighted earlier. Should that be the case, do you see volumes coming off in the next 2 to 3 quarters going ahead?
Well, I would say in the very short term, I think it's a bit tepid. But, again, I'm not too worried because we all understand that, the India is actually going through one of its largest festivals, which is the festival of, making sure that there is a democratic election process. And if one were to look at 2014 in a like-to-like period, you would see quite a similar trend. Now, whether it's structural, which means that, is it because of a larger issue on liquidity, etc., I think another, few months will be required to really understand it. From my point of view, I think I do see certain, green shoots in the market. We, I think, are fairly well positioned. And yes, we will continue to make sure that we look at our portfolio very carefully, exit businesses or, segments where our margins are negative to absolutely low margins, which are going to dilute our efforts of delivering our goals towards delivering AkzoNobel's 15 by 20.
Right. The exit that you were mentioning, that has been a function in aiding your margins, which have come in at about 14.8%. But unlike the situation that was there in 2014 when we had commodity prices cool off significantly, crude has again seen a big up move. In fact, it's up more than 25% on a year-to-date basis. And while there is always that lag when it comes to raw material prices, and we saw that play out in the fourth quarter, do you see that as a cause of concern going forward? And would you be able to manage those concerns going forward in the form of price hikes in some of your products that you are into?
So for the moment, if you really look at, I think we are sufficiently covered for this at this point of time. See, there are two basic factors that impact the paint industry and players like us. First is crude, rightly mentioned by you. It sort of fell down to almost $60 a barrel, back almost close to $70 a barrel. It's went up to almost 73, 74. It's now cooling a bit. I think that's a factor which is uncontrollable at this point of time, unless we see a dramatic shift, which means that there's an outbreak of moving significantly above. I think we are adequately covered. But the larger factor is it's not just about crude; it's also about currency. And even there's been some stability. If you were to look at rupee, there are fluctuations on a day-to-day, month-to-month basis. But yes, to answer your question, if the crude goes ahead of what our prediction for the year is from our procurement point of view, then yes, it would necessitate us to look at selective price increases. At this point of time, we don't see the need immediately to do it, but yes, we will look at places where we have got renovations on our brand or certain innovations coming in to try and see how we want to sort of manage the mix and pricing.
Right. Sir, just wanted a word on the competition in the market. We've had an entry from another big player with lots of investment coming in terms of building up the sort of capacity. But even after speaking with them, we get a sense that the paint industry is a very tight-knit industry where there are just 3 to 4 players who command a significant share of the organized industry. How would the sort of competition be, and you being placed very strongly in the geographies that you are in, how do you see the competition and the competitive outlook looking like, say over the next 2 to 3 years with the entry of a new player and the fact that GST and the benefits of the unorganized to organized move?
So again, I think that's a very valid question. If I would, when I look at entry of new competition, look at not just a 2, 3 or a 5-year time frame, I'd look at a decade or 2 decades of time frame. And if you look at even a decade of time frame, pretty much the market share of the top 4 players have accounted for more than 80 to 85% of the organized market. A lot of players have come in. If you were to look at a decade, you had players, very big international companies trying to make an inroad into India. You had a lot of other local players coming in. You've got some players who've come and spend a lot of money. But pretty much to run a successful and profitable business in this industry, I think it takes time. It takes time to build a brand. It takes time to build distribution networks. It builds time to get affinity. What I see with a new player entering is, the short term is a bit disruptive in terms of trade promotions, rebates, etc. But really, I think from our if you look at it from an AkzoNobel or Dulux perspective, firstly in the paints part of the portfolio, I think we are pretty good, well placed. We've got a very high share, or relatively much higher share in the premium end of the market, where we are effectively still a number 2 player. And typically much of the impact happens in the economy and the lower end of the market to start with, and then you sort of start building premium. The second thing is, we've got what Dulux stands for is unmatched quality, terrific global presence, and we've got a unique proposition in the color offerings that we sort of bring into the market, simply because we've got a global aesthetic center. Now, this is, to my mind, a very powerful tool, and that helps us to enrich lives of our customer using and provide an opportunity to consumers to transform lives using paints. Even from a coatings perspective, I believe that we've got the technology, and we still need a lot more technology, of course, in the country to try and make sure we sort of build our propositions much more. But if you start looking at some of the investments we've recently started putting in our powder business on metallic bonding, or in marine and protective coatings for fireproofing, these are best in class. So, I personally believe that it's, the lower end of the market that sort of gets impacted first with the entry of a new player. And it's not an easy or disruptive stuff that will happen. It will take time to build it. This industry requires quite deep pockets to build a sustainable, profitable business model.
Right. Sir, just wanted a word on the revenue mix. 706 crores in top line in the fourth quarter. What has been the share of the decorative paint business, and what has been the share of the industrial paints business in that?
So I won't give you at a quarterly level because we don't give segment-wise numbers. But what I can say is the paints accounts for roughly 65% of our portfolio, and has had a good performance in the last quarter, pretty high single-digit growth. And then we are pretty confident of it. As I said, in the coatings part of the portfolio, we are looking at re-looking at the portfolios. We've got some very terrific businesses in automotive and specialty coatings, powder coatings and protective. But there are certain segments which have not been profitable over the many years, and we really needed a clear strategy with our goal of trying to deliver 15 by 20 for AkzoNobel. Our India's target of making sure that we deliver at least a double-digit margin for 15 by 20. I'm fairly confident that we are on the course, and I think this is something that we'll stay connected. I have every reason to believe that with some of the work that is happening on innovation and renovation of our core propositions in paints, and some of the launches the customer contact programs that we've got in our coatings business, we would be able to, over the next few quarters, build a profitable growth story. It's not going to happen tomorrow. It's going to take a bit of time. But this is something that, over the last few weeks and months, I've been trying to explain to our customers, our shareholders, that this is the way we like to draw a strong footprint and continue to make sure that we leave a strong legacy in the country.
Sir, another strong player amongst the pack that you operate in has said that the slowdown in the auto sales business, the volume degrowth that we've seen over the last 6 to 8 months has had a negative impact as far as the industrial automotive paint coatings business is concerned. Any sort of fears that you are seeing there that would not help in terms of achieving the targets the internal targets that you have set with respect to this segment particularly?
Well, two parts. Yes, there is a bit of a slowdown, and hence the team is trying to sort of re-look at all the segments that we participate. But just for your information, our participation in what we call the automotive OEM, the sort of business is not very significant. We are a much stronger player in the aftermarket, where our brand Sikkens is a global leader in terms of automotive refinishes. But yes, the reality is that the automotive business is going through a bit of a slowdown, and we are trying to craft plans to try and make sure we address that.
So would those plans include setting up new facilities? As you mentioned that there is a need in order to technologically upgrade yourself in the industry with a focus on constant innovation. Any new product launches, anything of that sort that you have in mind over the next 12 months?
Yeah, yes, we've got a lot of, I won't get into specifics of brand launches, etc. But suffice to say that, yes, we've got a very strong 8-quarter innovation pipeline that we build, and we've got some slew of products coming over the next 1 year. On automotive specifically, look, as far as capacity is concerned, it's not an issue for us. We've got adequate capacity in all our plants. We've got 5 plants running, all over the country, and I think we are sufficiently well poised to make sure that we can, if required, cater to any excessive demand. So that's not a concern for us. As far as new launches are concerned, look, it's also about understanding customer needs, looking at the need gaps, and trying to see, make sure that our brands or propositions speak to certain issues that India has or certain states have. So yes, we are on that job. I think that's an ongoing job. Fortunately for us, we work very closely with our global parent to try to make sure that we get access to, within our best possible extent, to global technology to try and make sure we are able to strengthen our propositions into the Indian market.
Thank you so much, sir. We leave it at that. It was really good talking to you, and hope to speak with you again when your first quarter results come in.
Thank you, good luck, and wish you the very best. Thank you very much.